Welcome to Trading Lounge and the Bitcoin report for Tuesday, April the 5th. And this is just the log scale chart here. It's one of the long-term charts and it's a weekly chart. But I just wanted to point out some of the indicators here. So the MACD here is giving its first, well, kind of second little green entry sort of signal to go at this point. However, the volume is not really increasing into this trend, so that's a concern. And the other concern is too that from this top here, roughly this crossover here, moving down through to here, the indicators move back up quite high, 80%, something like that. One of them's lagging, but this trend here hasn't moved up like 80%. So the indicator is running in front of the market, so to speak. So it's becoming into an overbought situation the time it reaches 50,000. So if this market was going to fail based on this, well, then it would fail at the 50,000 at this point. That's the way that I see it. However, if this market finds support on top of this level here with a classic trading levels pattern that would look like this, so if this was the 50,000 across here, we had the arrival, the reaction, the first high above the level, the ABC, and then finding support over here, well, then we would turn bullish at that point. And that means that this wave 2, or could be wave 4 as well, could play a part in this particular move from this point. But we would definitely need to see support on this level before seeing the market higher at that point. Otherwise, we'll just see it move down. We're currently long at the moment and we'll stay long until we're at 50,000, and then we'll exit at that point. So yeah, look, I just wanted to show the indicators, but the indicators are giving two different sort of readings. The MACD is giving a buying opportunity and the stochastics here is saying, well, it doesn't have a long way to go at this point, and the volume's also not really increasing as well at this stage. We would expect it to this far up in the trend. We thought, you'd think that it would catch on at that point. This whole base here is quite low volume, but you would expect that in a corrective move to the downside anyway, because all corrections are on lower volume than their previous trends. While we're at it, we might as well have a look at the longer term trend as well. First of all, it's log scale over here. So I know that a lot of folks have got this as wave 1 and 2 over here, then they've got this as wave 3 and 4 here, but I don't understand that, because it would make wave 3 here shorter than this particular move down through here. So yeah, all I can see, the only way that you could possibly count this is a series of 1s and 2s in this whole market. I don't think it fits in any other way, and rightfully so. I mean, Bitcoin, it's only just begun. It's just waking up, I mean, once everything that that's on the internet is on the blockchain, well, then we could say that the market was fully sort of developed at that point, that technology. But it's not, we don't see real estate on the blockchain yet. We don't see cars, or there's nothing on there as yet. They're still building it. So, this all makes sense to me, having these as 1s and 2s in all of this here. So, I may not have the count exactly right in one way or another, or degree of structure or something, I mean, there's a good case for putting this wave 2 over here. Not so much with Bitcoin, but with other markets, we've seen this spike down through this low over here. So, there's a good case for putting wave 2 over here, for example. So there's some variations on things, The other thing here too is that, at log scale, it's okay to look at this as a wave 4 or this as a wave 4 here, but taking it off log scale, when you think about it, if I can just go to price settings here, scale, just go to linear, get rid of this for a moment. If we took this particular move up through here as whatever from this previous low here, because there is 5 waves within that move here, it comes down that the market's pulled down. I mean, wave 4 would pull down 38.2%, but this is pulled down, pretty damn close to 61.8%. So, having wave 4s across here, it might work in log scale, but it doesn't really bite in linear scale. So this wave 2 I've got here, that could certainly go over here as well, and we could look at this as wave 1 and 2 here, and then 1 and 2 to the upside. But I can't go long here. If you know me and you know the trading levels, there's no way I can go long without support on number 5 here, on 50,000, being 5 being the second strongest number in the market. It doesn't matter. So look, it's a bit of a guessing game of what the count is. I understand that, but the one thing I can say is that this market is just waking up. It's just beginning, and technologies always win. The race. New technologies always coming in. They have their, everything has its initial push and second push and rounds of funding and this and that, and there's lots of swings and up and down. It takes a while to get sort of established, and we're still in that, but the beast is still waking up. So anyway, as far as the crow flies, this stochastics is moving up here, and I like using the stochastics with Elliott Wave. I think it's one of the better indicators to use, and the gentleman that invented it, George Lane, who used to trade the S&P 500, used Elliott Wave and this indicator. That's what he did. He passed away 15-20 years ago though. But yeah, so anyway, so today we'll just go in and have a look at this this little picture in this point here. But yeah, the takeaway is, unless we get a classic trading levels pattern on the 50,000, then I would expect this market to have another leg down at that point. So on the intraday level, where we have our trades, one here and one here, we're looking for, well, we've been counting from the low down here. This would be wave 1 in green, 2 here, 3 here, ABC for wave 4, up for wave 1 here, and ABC for wave 2 coming into here, looking for wave 3 still here, and then wave 4 and wave 5 here for this green move here. Now, this would be the corrective move. At this point here, this is where we would expect the market to fail and not find support on this level. So this is where we're going to take profit on those trades there, from these ones to this one, and we'll just wait for the next setup at that particular point, because after 5 waves here anyway, we're going to see some sort of pullback, and we'll just see if that's going to be corrective or impulsive, and we'll pick up the golden thread that runs through the story at that point. The bigger sort of bullish picture for this is not a lot of difference really, but just building up from the low here. So in this case we would see, this is 1 and 2 here, and 1 and 2, and then 1 and 2 and 3 and 4 here, and then 1, 2, 3, 4, 5 for the third wave, for the fifth of the third, then the fourth, and then the fifth up there, and then wave 1 and wave 2 coming back in that sense there. So like I mentioned before, we would need to, at this level here, we would need to see there's only 3 really patterns that it can be really, if it's going to find support and move up higher, and this is the most common pattern here. So we'll just look for this here. So once we arrive here, we'll be exiting, and if the market's going to go up higher, then we'll just basically look for this pattern here, and then we'll get back in over here. And if this doesn't occur, well, then we know that it's going to drop at that point, and we've done our job, and we'll be looking on the short side at that point. So I'll leave it at that. It looks like the market's doing all the right things at the right time, so we can look to see this market push higher, also in line with equities as well. I mean, if you've been looking at the S&P 500, you know that we're looking for a possible top in that space there as well. So we shall see. Alrighty, thanks for tuning in. Cheers.